Hi, I hope you are not diabetic because I'm going to give you a sugar high. With major global producers, Brazil, EU, and Thailand, facing a sugar production crunch, India's sugar industry is poised to taste sweet success. Brazil, which produced a multi-year high of 38.4 million tons of sugar in FY21, is likely to see a lower crop yield due to unfavorable monsoon and less sowing, causing a shortfall in exportable surplus. And as reports of weaker crops start to emerge from the south central region in Brazil, global commodity traders started to build long positions, causing a sharp rally in the sugar prices. This puts India in a sweet spot, especially since we opened FY22 with a balance of 9.9 million tons of sugar. Hey, I am Viral Shah, back here with another sector update. And today, let's take a walk through India's famous Gande Ke Khet and see how some stocks in the sugar sector and its ancillary industries look from a 2 to 3 year perspective. India's sugar season 2022 is expected to see 30.8 million tons in production. This estimate is based on the assumption that the sugar plantation in Maharashtra and Karnataka would be marginally better than last year. And it's fair assumption given the reservoir levels are healthy, the rains are expected to be good, and the yield in UP is likely to normalize this year after it was infested with pest and rainwater stagnation last year. In fact, farmers in UP have even started growing a new variety of sugarcane which yields 40% more output. Long story short, with the gross sugar production expected at 30 to 35 million tons and a strong buffer of consistently high closing stock, India has moved into a structural surplus scenario. Now this oversupply can not only be exported, by the way, WTO has allowed this subsidization of sugar exports only until 2023. But sugar can also be used for the production of ethanol. Ethanol, what is that? It's an organic chemical compound, and I'm sure you have all used ethanol in one form or the other. It's part of your alcohol. That's interesting. It's part of your fuel, even used in industrial solvent. And if you have been paying attention to the news lately, you will know the ethanol blended petrol will herald India's move towards being cleaner and greener. Repeat after me. Swachha Bharat. Jai Hind. Okay. So the government's ethanol blending policy, EBP, has been quite a successful initiative, one that was achieved due to shift from partially regulating the industry to fully regulating the industry on all fronts, from sugarcane volume and prices, to sugar volume and prices, export subsidies, power volume and tariffs, ethanol volume, and molasses production. Given this success, the government has also decided to advance its plan of 20% ethanol blended petrol by 2023. Who benefits from all this? Sugar and bioenergy companies. And if you're an investor looking for medium-term opportunities, here are some companies that look ripe for the picking. First, Balrampur Chini. The sugar mill company is one of the biggest and most significant beneficiary of the higher ethanol blending policy and lower ratio of cost to the production. Number 2, E.I.D. Parry. The sugar manufacturer is on a turnaround path. It has relocated its assets to increase cane availability and has also monetized its investments to reduce the debt. The third company we like is ethanol plant supply. Praj Industries, one of the biggest beneficiaries of ethanol blending policy. Praj Industries supplies first generation and second generation ethanol plants and provides solutions for bioenergy, high purity water, critical process equipment, breweries, and industrial wastewater treatment. Its robust order book, growth outlook, and its strategy of working towards a circular bioeconomy with a focus on bio-industrial space will augur well for its financials in the long run. And that's all for today. This is Viral Shah signing off. Happy New Year. This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.